Welcome to our weekly Ask the Fund Manager series. The premise is simple. We put a fund manager on the spot and we ask them questions about current events and how these events impact on investment markets. We aim to keep it interesting and understandable and do this all in under 5 minutes. We hope you enjoy.
So summer's over and markets are back in full swing, and September has truly stolen the spotlight. Gold smashed through its previous records, soaring to an all-time high of $3,800 per ounce. Now, this remarkable move is just one example of the interesting trends that we're seeing across global markets. And in this episode, we'll unpack what's been driving these shifts and explore the key dynamics that have shaped this month in markets. I'm Emma Blankson, an investment specialist here at Aviva Investors, and this week I'm pleased to be joined by multi-asset portfolio manager Harriet Ballard to dive into the standout moments and themes shaping this month's market narrative. Harriet, it's so great to have you here with us today. If you had to sum up September in just 3 big themes, what would those be?
Thanks, Emma. It's a pleasure to be here. I've heard the word Goldilocks a lot this month. Investors think the market is not too hot, not too cold, it's just right. And that has led to positive performance across equities, bonds, and credit over the month. We've also seen supportive central bank policy from the Fed, which has also helped feed into the more positive narrative. But we've also seen some political developments and rising fiscal concerns over the month and a real surge in gold prices.
Interesting. Thanks, Harriet. So why don't we then start with central banks? We saw the US Federal Reserve make a move on interest rates. Is there anything that you can tell us about this?
Yes, the Fed resumed rate cuts this month. They lowered the federal funds rate, and that took the policy rate to between 4 and 4.25%. This move was driven by rising risks to employment, even as inflation risks remain. And while the overall cut was expected by the market, and the pricing of future cuts to the end of the year is little changed from that meeting, looking forward, the FOMC is quite split in terms of where it puts more weight on the risks looking forward. Some put more weight on the downside employment risks, and others more weight on the upside inflation risks. And it's a little bit balanced moving forward, but at the moment, the unemployment risks seem to be coming more to the fore.
Interesting. So I guess what I'm hearing is it sounds like a bit of a cautious picture is being painted here. But actually, on a related note, looking at some of the asset class implications of what we've seen this month, gold has been in the spotlight. Would you be able to walk us through what's been driving its performance?
Yes, gold has reached all-time highs in September and gained over 40% now year to date. Fed rate cut, ongoing geopolitical tensions, a weaker dollar, they've all contributed to a strong safe haven demand. Central banks globally have also continued to increase their gold reserves, and that's also further supporting prices. And technical indicators remain supportive, and many analysts see potential for gold to move even higher.
Certainly, and I think this definitely sounds like a trend that we will definitely continue to monitor in the future. Can you tell us about anything that's been happening in the UK?
Yeah, that's right. I mean, of course, in the UK, public finances have come under increased scrutiny and are putting pressure on the government's fiscal position. As a result, there is heightened anticipation around the upcoming budget, which is expected to outline the government's approach for managing these fiscal challenges. The decision will have implications for how the government spends money and also how it taxes both companies and households. And for investors, these developments are significant because they will likely influence the UK growth outlook, Bank of England policy, currency movements, and overall risk appetite.
Of course, and indeed, it's shaped up to be a bit of a juggling act for investors, having to keep a very, very close eye on central bank decisions, asset prices, and the fiscal environment. Now, before we wrap up, what's your overall take on market performance, and what are the risks that investors should be watching?
Well, as we said at the beginning, asset classes have performed pretty well over the last month, and in a calmer environment, volatility has been quite low. Equities performed well, with the S&P rising 3.5% over the month. Bonds rallied, and gold performed strongly as well, as we mentioned. But risks remain. The interest rate environment is evolving. Fiscal consolidation is politically difficult. Geopolitical tensions continue to simmer. So we continue to keep an eye on how these risks unfold in the coming weeks and months.
Harriet, thank you ever so much for your insights. It's very clear that the story is far from over. Thank you for listening, and please join us again for another episode next week.
Thank you for listening. We hope you enjoyed this episode, and we hope you listen in again next week. Also, we love to get feedback and ideas for future episodes. You can use the link provided below to share your thoughts. Before you go, just some important information to be aware of. Unless otherwise stated, any opinions expressed are those of Aviva Investors. You should not be viewing this as an indication of any guarantee of return from an investment managed by Aviva Investors, nor as personal advice of any nature. Information contained herein has been obtained from sources believed to be reliable, but have not been independently verified by Aviva Investors and is not guaranteed to be accurate. Past performance is not a guide to the future. This material is not a recommendation to sell or purchase any investment. The value of any investment and any income from it may go up as well as down, and the investor may not get back the original amount invested. Nothing in this material, including any reference to specific securities, asset classes, and financial markets, is intended to or should be considered as advice or recommendations of any nature.